G'day folks, welcome back to another update for the S&P and the NASDAQ. Now highs are persisting to break higher, but do watch for that divergence, that's still in place. So pretty much the same thumbnail if you like from the previous update. Don't forget to hit that like and subscribe button to support the channel, and also reference the +1 videos where we do a deeper dive into some of the trading strategies covered in this video and others. In terms of the outlook, based on the latest fundamental analysis for the S&P 500 and the NASDAQ, the markets are being driven by three key factors: strong corporate earnings, sustained growth in the AI sector, and optimism around potential Federal Reserve rate cuts. However, these gains are accompanied by significant risks, including high market valuations, a potential economic slowdown, and ongoing geopolitical volatility that could lead to increased market uncertainty. So this is the S&P. So we always look at the long-term trends on the weekly. You can see it's making further highs since our last update, but the CCI's risen slightly, but still a bearish divergence compared to the bullish move on the price. So price going higher, the peaks on the CCI still lower. That's a bearish divergence. Now again, I'm not going to draw a target until we see this start pulling back. Then I'll draw a target to pull it back to probably around that Fibonacci range there. On the daily chart, again, we had a resistance up here at 66.60. I'm going to move that to our new high there. That could go higher, of course, but that's actually edged a bit higher since our last update. The CCI there, it's a bit hard to read, but you can see there it's still a declining peaks on the CCI. So that's also a bearish divergence on the daily chart. Again, I won't draw a target range yet until we see it start pulling back. On the hourly, again, we had a bearish divergence here. Now, this is actually, that was an equal high to that, so that hasn't been a bearish move to that point if we extended it. But if we took it to that point, you can see it's broken higher. So that would have been a failed divergence. But again, depends on where you draw these trend lines. Back here would have been the first line of a bearish divergence. Let me just highlight that between those highs and the equivalent of those points there. Now, if you took that first divergence, this is why I don't trade these divergences. I look at them as potential exit areas. So if you took it to that area, you can see it fell to the 50% range, but even back to that area, it still broke below. But even back to that significant low, it broke into that 23-38% range. So that's already hit that range there. So it depends where you draw these trend lines. That was the first divergence there. The second wasn't a divergence, although this longer one still played out to that point, like we said. And then we had another area here. So that secondary area hasn't actually worked out. But at the moment, notice the CCI is broken below the moving average range, giving us a bearish outlook. There's a bit of consolidation up there on the price, and it could possibly start pulling back here on the hourly, so I'll keep an eye on that. If we go to the 1 hour back test, this is the 1 hour chart, and this is the daily. We always go in the direction of the daily chart. So here during that period when the CCI and the price was above the moving averages, that's where you would have started going long here on the 1 hour chart. And you would have closed it out each time that CCI broke into that moving average range on the daily. So you would have closed it out there once. That was back here. Let it run another few days and then close it out again there. In this case, it went up higher, it broke down. You wouldn't have entered long positions during that period when the CCI was in the moving average range. You would have entered a long position there, started going long from that period, let it go until the very latest on the daily. You would have closed it out on the 1 hour time frame. Now notice there as well, the daily indicating you should have closed out your positions on the hourly according to the daily. But notice here we had a bearish divergence as well. Now I'm deliberately zooming out here so you can see the bigger picture in terms of, and I've drawn the trend lines there. So that was the start of a pullback on the bearish divergence. So you would have had those little trades there. Now since then as well, you'll notice here the CCI has been consolidating even though the price is rising. You could have still traded those, but you would have had to pay close attention to these bearish divergence on the 1 hour time period. And that was the latest point there where the CCI, I'll zoom in a bit, the price broke below the moving average and so did the CCI. So you might have had a contract open at that point there, but you still would have been up had you traded these previous trades. So you would have got out just in the start of that decline and avoided that drawdown. And since then, we've had other peaks above, You can trade this on the hourly alone, but I prefer to trade it when the daily CCI and the price are in the same direction like it was back here. That would have been prime area to go long. Now this is the NASDAQ, so on the weekly first off, again you can see there the price has risen just slightly since our last update, and so is the CCI. Now that's coming close to reaching that peak, and if that CCI breaks higher than that point there, we're going to invalidate that divergence. But at the moment that divergence is still in play. I drew a target range there, so we'll have to adjust that very slightly. I won't do it now, but you have to adjust it very slightly since that small peak rise from the previous update. On the daily, that's also risen slightly again, as we said, with the CCIs slightly higher as well, but still a bearish divergence versus the price. So if we change that point there, and also have to move that resistance to that level there, that's also another resistance change. So that's still a bearish divergence in the short term. And what I've done back here, I've marked where the previous bearish divergence have occurred and where the price is retraced according to the CCI drop. And you can see there a bearish move there, higher pricing movement, it's hard to see there, but a bit of a bearish move there as well. Each of these points are the main ones. There's probably smaller ones in between as well, but these are the main ones where the price is retraced with bearish divergence. So that's the daily NASDAQ. Now on the hourly, again back here, since our last update, we had this bearish divergence. That failed to hit that. So we're going to invalidate that one as well, similar to the S&P. Now since then, that CCI has risen slightly. To that point, it went higher, and so did the price. So that was still a bearish divergence at that point. Now since then, it's risen to that point. Now you'll notice there that's still lower than that high. So that's still a valid bearish divergence at the moment. So that could fall. And as soon as it starts falling, we'll probably bring back the Fibonacci to that low there and measure it. If we go back to the back test for the 1 hour, again going long based on the daily during that period, you would have taken long trades when the price and the CCI were above the moving averages, and closing it at the very latest when the CCI broke into the moving average range. So again, similar to the S&P, you can see where they broke when the daily broke below for each of those points. But again, notice we've got these little bearish divergence throughout the whole series of CCI and price movement, and that's where you would have avoided some of these drawdowns. If you enjoy the content, subscribe at least on a free trial to my Patreon page, where I publish weekly bullish shares across regions of the world's markets. Hit that like and subscribe button. Thanks for watching, and speak to you in our next video.